If you invested $10,000 in Microsoft 10 years ago, you'd have over $100,000 today. Let that sink in a moment. It's not from Bitcoin, it's not from Tesla, it's not some lottery ticket startup. It's Microsoft, the boring software company that your parents used to work at. And here's the part that'll blow your mind. Most people still think Microsoft is too expensive. They've been saying it since $30, since $100, since $200. Now it's over $500 a share, and Wall Street's calling for a 35% upside from here. But here's the real question. Can it actually get there? Microsoft is one of the most valuable companies in the world at $3.7 trillion. And yet it's trailing behind most of the Magnificent Seven. So is it slowing down or about to explode? Well, on one hand, Azure is growing 39% year over year, and AI partnerships like OpenAI are rewriting the playbook. On the other hand, competition from Amazon, Google, and NVIDIA, it's brutal. And one misstep in AI, well, it could cost them billions. My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. And that's a good thing. I'm not here to sell you some expensive retirement plan. No. Today, I'm going to be breaking down Microsoft's numbers, its growth catalysts, and their hidden risks that nobody wants to talk about. And at the end, I'm going to explain whether I think it's still a buy or not. All right, let's get into it. Microsoft is a tech powerhouse, and it's not just about Windows anymore. Yes, it was originally known for its Windows operating system, which still dominates more than 70% of the desktop market. The company has, of course, grown far beyond software. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Today, Microsoft is a leader in cloud computing, AI, gaming, and enterprise solutions, and that diversification is doing wonders for the company. Now, you've probably used or at least heard of some of the products in its diverse product lines or business lines, whether it's Microsoft 365, LinkedIn, Windows, or Xbox. Microsoft products, they're everywhere. In recent years, Microsoft has doubled down on AI, even entering into a partnership with OpenAI to integrate advanced AI tools into its product lineup. This isn't just a nice to have. AI is becoming a battleground that will define the next decade in tech. And this move, along with Microsoft's massive cloud business, Microsoft Azure, has pushed its market cap to around $3.7 trillion, making it one of the most valuable companies in the world, second only currently to NVIDIA. But the race between them is neck and neck. Now, let's talk about Microsoft's stock, because the price tells a story all on its own. And if you want to follow along, go ahead and scan this QR code. Microsoft is currently trading around $502. Zooming out a bit, the stock is up 19% year to date and 21% over the last 52 weeks. So despite a few dips earlier this year, the overall trend remains clear and it continues to grind higher. Compared to the rest of the Magnificent Seven, though, Microsoft trails behind most of its peers, except maybe for Apple. And you can take that news in one of 2 ways. 1, Microsoft is showing signs of slowing down. Or 2, this could be a setup for an even greater upside if the market is underestimating it. And that's exactly what makes the next part so important. Do the financials back up a bullish case on Microsoft? Well, the end of the company's fiscal year, 2025, saw a 15% increase in revenue, leading to 17% growth in operating income. Meanwhile, the bottom line grew at a similar pace of 16%. And that's steady, profitable growth, not just hype. Breaking down by segment, productivity and business processes generated $33.1 billion, up 16%, and that was fueled by Microsoft 365, LinkedIn, and Dynamics 365. Intelligent Cloud delivered $29.9 billion, up 26%, driven by an impressive 39% growth rate in Azure and other cloud services. And this is the kicker. Azure is becoming Microsoft's growth engine. Lastly, the personal computing division contributed $13.5 billion, up 9%, with decent growth in Windows OEM, Xbox, and search and advertising. Overall, Microsoft is balancing heavy investment with strong revenue growth and still keeping profitability intact. And the result is a diversified business mix with cloud and software at the core, and that is a powerful position. But the real question is, what catalysts could push Microsoft even higher from here? Well, to answer that, let's consider its potential tailwinds. Microsoft is well positioned to compete with its rivals. As of the first quarter of 2025, the global cloud infrastructure market is dominated by three major players: Amazon Web Services, followed closely by Azure and Google Cloud. Together, these three giants control about 63% of the entire global cloud market. And while AWS is still in the lead, Microsoft is closing in fast. Azure posted a 39% surge in growth, backed by record investments in AI, OpenAI partnerships, and massive data center expansions. And this isn't just growth, it's a land grab for the future of cloud and AI. Even better, profit margins tell a different story. Microsoft is running at 36% margins versus Amazon's 9%. And that margin cap can be an excellent weapon. It gives Microsoft more firepower to reinvest, outlast, and potentially outscale its rivals. But Microsoft's, well, it's not just relying on cloud, it's also making bold acquisitions to keep that growth story alive. For example, the $69 billion Activision Blizzard deal was one of the biggest in technology history. And then there's a deep collaboration that's ongoing with OpenAI, giving Microsoft a direct line into cutting-edge AI. And here's why it matters. These aren't just trophy acquisitions. They expand Microsoft's reach in gaming, AI, and cloud, three markets that are shaping the next decade. And these moves provide access to new technologies, broader customer bases, and competitive advantages. And if they can execute it well, Microsoft doesn't just add revenue, they strengthen their entire ecosystem. And that's how you build long-term growth. And it doesn't stop there. Microsoft is bringing AI into the real world in ways few competitors can match. AI integrations, which were at first adopted by traditional businesses, continue to expand in different fields. On August 20th, Microsoft announced a major extension of its partnership, as an example, with the NFL. Copilot and Azure AI are now being used on the field, yes, during actual games. Over 2,500 Surface Copilot Plus PCs are now helping coaches and players with real-time analysis. AI dashboards are assisting with scouting, injury checks, and even salary cap management. And here's the kicker, pardon the pun. While this deal may only have a small financial impact today, the exposure could be massive. The NFL puts Microsoft's AI in front of millions of viewers worldwide. And if this execution succeeds, it could open the door to partnerships with other leagues or even entire industries. But before you get too bullish on Microsoft with every growth story, there comes a little risk. And Microsoft has a little bit to talk about. Let's cover the bigger ones. First, Microsoft faces some fierce rivals in nearly every market that it operates in, particularly among the Magnificent Seven. Companies like Amazon, Google, and Apple are all aggressively pushing into overlapping industries. And while Azure is growing fast, AWS and Google Cloud, well, they're not slowing down either. And in AI, Google and NVIDIA, well, they're breathing down Microsoft's neck. And that constant pressure could make it harder for Microsoft to sustain consistent growth and profitability. Next, we have Microsoft's huge bet on cloud and AI services. The company is spending heavily, that's billions of dollars, to dominate the space. But execution risk is sky high. Any delay, misstep, or underperformance could hand competitors the advantage. And in a market that's moving as fast as it is today, even small mistakes can cost billions. Additionally, Microsoft is investing billions of dollars in new products and services, including AI and gaming. But these investments don't always guarantee strong returns, and in some cases, projects may fail to gain any traction. Then there's acquisitions risk, right? Massive deals, like the Activision Blizzard deal, can run into integration headaches, cultural clashes, or even heavy regulatory scrutiny. If these partnerships or acquisitions fail to deliver on the expected results, they could drain resources, harm profitability, and divert the company's attention from its core strengths. And finally, we've got cybersecurity risks. And as one of the world's biggest tech companies, Microsoft is a prime target for hackers. For example, there was a major breach against the company in July, which exposed thousands of servers and affected the ability to share documents within organizations. While the incident isn't as bad as, say, the release of personal information or access to secure cloud services, any and all security threats can have a significant and immediate impact on the company's operation and reputation. Microsoft, I think, needs to strengthen its cybersecurity to attract clients, enterprises, and government institutions to continue using its products. So with all their strengths and red flags covered, I think it's time to get down to the most important question. Is Microsoft a good investment today? Well, analysts rate Microsoft stock a strong buy, giving it an average score of 4.77 with a high target price of $678. And that represents as much as 35% potential in upside. And overall, I agree. With Microsoft trading at a conservative 33 PE, I think it's a strong buy with plenty of potential, especially on longer investment horizons. Azure continues to expand and is well positioned to gain market share, while AI integration through OpenAI and Copilot is reshaping the productivity software landscape. Plus, the company also benefits from a sticky enterprise ecosystem, which makes client switching very difficult. However, like with any investment, you do need to be aware of the risks. Increased competition and any weakness in its AI ventures may translate to weaker financials in the coming quarters, which may negatively impact investor sentiment. That's Microsoft's overall narrative today. Huge opportunity, but risks you can't afford to overlook. But what about you? Are you buying into Microsoft's vision? Let me know in the comments below. And while you're there, if you found this video helpful, don't forget to like and subscribe so others will find it as well. That's it for me today. I wanted to thank you for watching, and I'll see you next time.